So
right?
I wish I was starting at 20 for sure in real estate. I was 25, but the first piece of advice I would give them is buy a property that you're going to keep as a rental. Try to target one of your first ones as one that could be a rental. And then if they don't have cash, you need to find a money partner.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, Migrate to Wealth listeners. Today I have the pleasure to introduce to you Paul Lizell. Paul is with REO Auctions, and don't get scared with the word auction. He's a nice guy, I promise you. I think it's an interesting world we're living right now. So when Paul's profile came across my desk, and we can figure out how we found each other, but I'm glad we did. But when I look at his profile, it's really important to see where the opportunities are going to come from, right? Where, especially given the capital markets where they are, with real estate pricing where it is, this is another tool that you want to look at and see where it fits in your entire portfolio. It could serve as, if you're looking for your own primary residence, it could serve as potentially finding your own residence. It could look at, if you're a fixer flipper, it could mean you're buying a property which is relatively cheaper compared to the retail market. Or if you're a wholesaler, you could do that. There's a lot of different opportunities once you have the strategy nailed down. And I was telling Paul, a friend of mine just moved from India. He used to do foreclosures in India, and he was asking me, and if you're listening, you know who you are. I don't necessarily understand the auction market. So, this is actually perfect. As you know, I use this podcast to learn more than to share. So this is going to be my opportunity to learn about how to look at auctions. What's the pros and what's the cons, and really what's the catch, and how to make sure your downside is protected. So with that, Paul, welcome to the show.
Hey, thanks for having me on, Saket. I appreciate it.
Awesome, buddy. Paul, we'll always open up with one question. What does migrate to wealth mean to you?
So I'm going to tell you what it means in two different perspectives here, but the first one being from my real estate perspective. So the migration to wealth. So when most people, when they get into real estate investing, they start off doing wholesaling. And wholesaling is, get the property under contract, sell it to somebody, make 10, 15, 20, whatever you can possibly make on that property. That's your profit. That is your short term, right? That's your highest tax bracket you'll be in with that. Migrating to wealth would be utilizing some of that cash, buy some rental properties, get some extra depreciation out of that, get some extra tax write-offs, and play the long game of appreciation on that property plus monthly cash flow. And you want to build on those. That's my first migrate to wealth. The second part of it, because I'm into two things, I didn't tell you what else I do besides real estate, but it's cryptos. I've been into cryptos since 2017. I started buying Bitcoin then, and I mine Bitcoin now, which gives me the dollar cost average. And with that mindset and cryptos, originally, you're thinking buy it, try to get this huge high, and then sell it, right? And trying to make some profits on there. My mindset with cryptos was always a longer term one. So I always had more of the rental property approach there. So I would buy cryptos. Certain ones allow you to stake it and earn additional crypto, which is like earning additional income. So I've held so many cryptos from 2017 till now. I've sold very few. And now I'm going to at the end of this cycle, which should be somewhere at the end of 2024 to midway 2025, I'm going to start selling a lot of those assets. Unfortunately, I'll have tax consequences, but I should be able to pull a bit out, put some cash on the side, and then as the market downturn happens in cryptos, I start buying back in dollar cost average again.
Yeah, no, I love that. I actually didn't know that side of your life. So thank you for sharing that. I think maybe for this podcast, we'll bring you on another one for crypto. But sure, for this one, I really would love to focus on auctions a little bit.
Absolutely.
So tell me more about, let's actually break it down. Let's make it auction 101 class, right? At a very, very high level. So when people are looking at auctions, what is an auction? Let's start there. What is really an auction to make sure that everyone understands the terminology?
And there are multiple different types of auctions, right? Where you get it before it goes through the foreclosure process. You can go through, or it doesn't need to necessarily go through. It could be through a tax sale. There's tax deed investing, right? There's the bank steps where somebody ends up either purchasing the property with the old mortgage on it that they have to pay off and any other liens that are on there. We don't really get involved in that because it gets really complex and you really have to do your due diligence on that and pull title on everything, contact the township, make sure there's no water liens, make sure there's no contractor liens on this property. So for us, we focus on the auctions that already went through the foreclosure process, and we're going to get the title free and clear of any liens. So that's our focus there.
So Paul, let me just make sure I break it down for people. So I think what we're saying is that auction is usually done for properties that in some kind of distress, or for the owners that in some kind of distress. That distress could mean a lot of different things. So it could mean somebody is not able to pay the taxes on the property. Right? They're able to, for example, if somebody had owned a property for 30, 40, 50 years, I will talk about Raleigh market, all of a sudden last 2-3 years, it saw some markets getting quadruple returns, which is great if you're selling it. But if you're keeping it, what it basically means is your taxes are 4x'd as well, right? Whatever if the tax rate didn't go up, the property is getting valued 4 times over. So even though you didn't cash out, now your taxes went up. So not everyone is able to afford that. So that is a tax lien stuff where the state or the county puts a lien on the property saying, we need to collect the taxes. That's one kind. The other kind could be, hey, you know what? I can't afford the mortgage. That's another kind, right? So there are multiple different kinds. What Paul is focusing really is on, it's already gone through the foreclosure process. Is that what you're saying, Paul?
That's exactly what I'm saying.
Now, what does that mean? Why that versus something else? Does that give you your risk tolerance changes once you go that route?
Yeah, you know what? I think it's the least risky of any of them. You know, when you go to buy it at tax sale, there's a lot more risk involved because there's a lot more different factors that could come into play, like you were just explaining. There could be IRS liens that are attached to the property as well. Whereas when you buy these from auction.com, Hubzoos, that are already through that foreclosure process, the bank has taken them back, and that's what's called REOs, real estate owned by the bank. And now they're going to resell it, and they have to resell it with clean title to you. So it's the most simple process. However, you could potentially make more by buying at tax sales if you do your due diligence right, because you can get deeper discounts.
And I think it's also, right, the more problem the title has. When I say problem, that doesn't mean it's scary. It means that the more unclean the title is, that means the more value you're adding by cleaning the title. Because the process of you reselling it, you'll have to make sure all the liens are removed, whatever was paid and all that good stuff. Negotiated, it's not paid. So a lot of that good stuff. So I think what we're saying is by lowering our risk, we're also taking lesser. Correct?
Yes. Correct.
That makes sense. That makes sense. More risk, more reward. So now help us understand, Paul, how does this process work? So let's say I go to Bank of America, they own some properties, which is REO, a bank on real estate. So how does that work now? Why are they putting on auction.com? Why don't they just run it?
So there's certain ones that they will just list on the MLS standard that are more retail ready, right? They feel they're going to get higher dollar for those, are more retail ready. They don't need a whole lot of work, or they're in an area that's very, very desirable. So I don't know exactly how these asset managers decide what to put on what. Sometimes they're given a group and they just have a lot of different properties and they list them on the auctions and MLS simultaneously so they can get both potential. And so we don't necessarily focus on those as much, although if it's a deal, we'll still go for that one. But I think most of ours end up being not in those primary great markets, but maybe a secondary market, maybe a Raleigh, North Carolina, which isn't Charlotte, North Carolina, right? It is a great market, but it's a little bit different type of market, or even smaller markets in, say Effingham, South Carolina. We do better in those tertiary markets and secondary markets than we do in a primary, in large part because we have very little competition that we're working against there. And since I want to say about 2018, just before COVID, people were still migrating, moving to different parts of the country. Baby boomers were moving south. So those were areas where people were going to, and we're very easily able to sell these properties on the retail side.
And Paul, why is tertiary market better?
It's mostly because there's less competition. So meaning competition from other investors. in those smaller markets, most investors don't bother with them. They want to be able to get a bunch of different rentals, maybe in St. Louis, Missouri, but not on a market an hour outside of St. Louis, Missouri, where it's more rural, much more rural, but there's still huge demand. Since COVID, these rural markets have been 10 times more demand than a city market, right? Than a major city. Since the outflows out of the cities and into the suburbs and the rural areas, and that's still ongoing right now.
Got it. And Paul, in your model, do you keep them as rentals, long-term rentals, or do you flip them?
I mostly flip them, but there's some that I keep. Like I do have one in Moorcroft, Wyoming, just outside of Gillette that I'm going to keep. I told you the 5-unit I would love to keep in Casper, Wyoming, but the financing and the prepayment penalties are probably going to make it where it's not worth it. So I'll flip it and then buy some singles here in Florida or maybe Texas or Tennessee, one of those different markets there. So yeah, I will do, I'd say the majority we just flip, and we're looking for what I call arbitrage. In other words, we could pick it up for much lower than market value, put it on the market as is, maybe clean the property up slightly, turn the utilities on, make sure everything's operational, and sell it to a retail buyer.
Oh, so which is interesting. Let's talk about that a little bit more, because I think when people look at auction, they're thinking that they'll buy a dilapidated property that they'll put a lot of work in. Maybe they buy it for 100, they got to put in 100K, rehab it, fix it up, and all that good stuff. And then the challenge is, well, I'm living in DC, or I'm living in New York, I'm living in wherever. How am I going to find a property? Not forget about finding a property in South Carolina. How am I going to find a contractor to fix it all up and all that stuff? So there's this scare factor. I know it's for me, which is because it's unknown. That's my assumption, which is limited. So how does that model work where, how do you find properties that don't require a whole lot of lift? And is there a way to do that? Or is it just more through experience you'll get to know?
That's our target. So it didn't used to be. I've kind of changed over the years. And I've learned to work smarter and not harder.
That's a smart thing.
So, because you could pick up these, and sure, a lot of these auction houses, a lot of these HUD properties they were train wrecks, right? Where you needed to put a lot of money into them. But if you didn't have a lot of margin to be able to do that, it's not really worthwhile. So you're trying to sell it to a buy and hold guy who will renovate it, do much less renovation, just rent it out. We didn't like that target property as much. So we've shifted over, I'd say really since about 2015, just a couple of years after the market bottom. And we've tried to find these properties that just don't need a whole lot. Call it a wholesale, right? Where you're just doing some basic stuff, maybe repainting the place, maybe putting a new carpet or some flooring, cleaning the place out a little bit, touching up. Maybe it needs a couple of appliances, but nothing major. We try.
So you're not moving the walls around. You're not taking out the kitchen tiles and redoing it. You're not putting a new HVAC. You're not doing major renovations.
Correct.
You're doing cosmetic changes. Is that correct?
Absolutely. As much as possible, just trying to find ones that need cosmetic work. If it needs a little bit, if it needs a roof and we have an agent in the area that has good contractors, I don't mind doing that. I with the HVAC, but I just don't want to get into a major remodel where I'm gutting the kitchen, gutting the bathrooms, gutting everything and doing all that, because that you really do need good boots on the ground to do that. And you can do that. And I have agents in different markets that are great for me in that aspect, but you can't do that in just any market willy-nilly, because you can really get hurt.
And then how do you pick a market, Paul? So let's say I want to start this auction thing, right? I want to work with you and trying to help me understand what this really means. So what's usually the starting point for something like that?
So right now, we look at one of the markets with the least amount of inventory, or the highest demand for people to move to. We don't want to look where people are trying to come to exit. So we don't do too much in California, even though New York and Chicago or Illinois have lower inventory right now. We don't necessarily be in those markets. So we try
I'm sorry, Paul, just question. When we say inventory, what does that mean?
It means houses available on the market. On the
that
MLS.
You can just go on Zillow or something. Is that what we're saying?
You could do that. So we call it Altos Research. And through Altos Research, you can look at each state. You can even look at by county of how many properties are available.
Can you repeat that name again? What was that?
Altos, ALTOS Research. And you can find him on YouTube. Mike Simonson, I think is his name.
Got it.
A really good channel. He does weekly updates, tells you where the inventory is increasing. Like we have a 56% increase in inventory here in Florida year over year. And a large part of that, most of that is congregated in Southwest Florida. And if you remember what happened about 2 years ago, Hurricane Ian, right, ravaged that area. And this was all predictable. You could see this was going to happen here. But what ended up happening was they redrew the flood maps for Fort Myers, Cape Coral, and different parts of Florida. And these are blue-collar, working-class retirement areas. These are people that don't have a lot of money. And when your flood insurance goes from $500 or $1,000 to $10,000, $12,000, $15,000 a year, you can't afford it. Now you need to sell that property. Plus your homeowner's insurance has gone up. And to top everything off, interest rates went from 2.75 to now 7.5%, right? So you have all these things coming into play where people need to sell these properties, especially Cape Coral. That got hammered more so than Fort Myers as far as the amount of inventory. Different areas up in Port Charlotte as well got hit. So it's kind of predictable that this is going to happen. And, the government, as they almost always do, ends up screwing things up with redrawing FEMA maps the way they did, because they really hurt people in those different markets. So
Paul, let me ask this question. So people who are living there today can't afford it, right?
Mm-hmm.
But the demographic hasn't shifted. So when you are taking that property and then you're selling it at a profit, that means you're selling it more, maybe a little bit lesser than the retail, but the demographic hasn't changed. So who's buying them?
Oh, like you talk about Florida or anywhere in general?
Like, let's talk about the Southwest Florida, for example, right? So you're taking on the cost right now, or whoever new person is buying it, they're taking on the cost increase in insurance, in taxes, whatever. How are they dealing with that? Because who is affording it then?
This is a great question. I think some of this is going to be other investors and hedge funds buying it. If you could buy it with cash, you don't need to worry about flood insurance, right? You can kind of get away from the flood insurance. You can self-insure and decide if it floods, I'm going to roll the dice. If it floods, I'm just going to pay for it myself. So you'll have cash buyers like that. You have a lot of people. I still talk to a lot of people who want to buy a place in Southwest Florida to have as a winter home. So you still have that happening, those people coming down. But what happens is we're at 2019 pre-COVID inventory levels here just because of what happened there. So it's going to take a good 6 months to a year and a half for that inventory to get gobbled up, especially at high interest rates that we have now.
Yeah.
And for the whole dust to settle on a flood map. And I'm sure they're in the process. I know DeSantis was trying to do things to help with the insurance, with the flood insurance and that kind of thing. They are doing a down payment assistance plan of like either 10 or 15% down for people to buy housing. Mm-hmm. So those things will help a little bit alleviate, especially in those markets where you're going to have some first home buyers and people not people with not high income.
And I think also the other side of the equation could be that the folks who owned the property before, now they may be able to only rent.
Yes.
Right? So they still need rentals. People, they're not moving out. They just can't. They're getting out of the home ownership. But they still need properties to live.
Yep.
Okay.
They are. They're in demand there. So that's a positive. So you can do it potentially. Like if you have cash and want to not worry about the flood insurance, you could still rent it out, probably cash flow that property.
Got it. And then Paul, what are the risks in buying on, let's say, auction.com? What do you have to watch? So let's say I go on auction.com. I think it's a paid membership. I can't remember now. I think I looked at it probably a decade ago now. So if somebody were to do that, what are they trying to be careful of?
So you got to be really careful. The banks and the asset managers will give you deceiving pictures of the property. This is the biggest thing you have to worry about. Like sometimes they'll picture a property that was from 2 years prior to when they're listing the property.
Got it.
And that doesn't give you a proper count as to what condition the property's in. So when we find a property that we're targeting, that we're interested in, we find an agent in that area to go out there to take some pictures. If we can't get interior access, we try to get them to look through the windows, take some pictures, give us some kind of an idea what they think the property might need. As far as work is concerned, if there's a way for them to get inside, obviously it's even better. Then we can get them inside. They can take some pictures and give us a better idea, maybe bring their contractor through to give us an idea of what kind of work it needs. And
most of these property, one thing you said, which is important, is that once the bank owns a property, the property is vacant.
Correct. Well, most of the time, not all the time. They are doing a lot of them now. HUD, we'll get into this real quick here. The HUD CWCOT program, where they're just foreclosing on these properties and listing them on the MLS. Some are vacant and some are occupied. So we got to be real careful with the occupied properties where you're buying them. Right? If you're buying them in New Jersey, you better be prepared to sit with that thing for 2 years before you can get those people out. If you're in Florida, if you're in Texas, you're going to be able to get them out reasonably quick. Even in Pennsylvania, where I used to live, I'd be able to get them out reasonably quick. But that's where you got to be very careful where you buy. But what you can also do, and I've done in the past, if you get a good deal on it, because generally the rule of thumb from what the auctions tell me is occupied properties sell at a 25% discount over vacant properties, which makes sense, right? Because you got a lot of unknowns going on there.
Correct. And you have the headache to figure out what to do with the tenant or with the owner who's living there still. Yeah.
And you can do cash for keys. Sometimes these people are in situations where they just couldn't afford a mortgage anymore, but they can afford what would be the equivalent of rent potentially in that market. Every once in a while, I think I've done over the years 2 times where I've rented back to people, and that's worked out usually okay, but I wouldn't recommend doing that all the time. It's got to be the right people.
Yeah. There's a reason why they can't afford it. That's right. Yeah. So, I'm not saying, no judgment, but there's a strong reason why they were not able to afford the payment.
Absolutely. It's the truth. Yeah. Generally, you don't want to do that. Let me tell you.
Yeah. No, completely makes sense. And Paul, so let's say I want to look at this as a next step. What's usually the next step? How do is there a consolidated portal where all the data from different REO websites, it's all coming to one place?
I would like that. That's something I want to work on as just a software program.
I think it's needed, right? Because there's that's, and then of course, making sure the taxonomy for every website is the same. So nothing exists right now. So right now it's all, you have to go farm out this to multiple different websites. The question I really had for you was, why multiple websites? Like, what's the advantage of them putting on like 10 different websites?
Well, for them, like auction.com, they want to have their own website, control everything. Same with hubzoo.com, same with Zone, same with Hudson and Marshall. Their small-minded approach, I think it's wrong. I think they're doing it the wrong way there. But that's what they're going to do, what they want to do.
Yeah.
There is a friend of mine. There is a software program out there called RealFlow. Don Fowler he's the owner of that company. And I've helped him kind of get in the door with auction.com and Hubzoo to try to get those links input so he can have in his software portal.
Sure.
So he may end up having that soon, but I actually wanted to talk to him separately. He and I started to talk about this the last time we met up, about me creating my own where literally it's all there, plus my training program is in there. Now, if everything's on one, it makes it much simpler, and you can look at it by state, and it'll bring up everything, whether it's from auction.com, HUD Home Store, Hubzoo, all these. It would just be much simpler for people. So that's something I'm thinking about putting together.
Perfect, Paul. Before we go to the next section, I do want to ask one thing about economics. Mm-hmm. So what kind of discounts are we looking when somebody buys something on auction?
So generally, you're going to get things anywhere from 20% off to you can get as much as 60% off, depending on the distress. And back when, after 2008 financial crisis up until 2013, I used to get stuff at 20, 30 cents on the dollar quite frequently. Now you're about 51 cents on the dollar for your pretty good deals, and up to, depending on the condition of the property, right? Up to about 70, 80 cents on a dollar. And then some that are retail ready, they go full retail. And I don't even bother with those.
So do you have a threshold for your property that you look at in terms of the discount?
So I'll show you, I'll kind of tell your students, everybody here exactly how we look at it. So, and I've gone much more conservative than most investors out there because there's just too many unknowns going on in the world and in markets right now. So generally you look at what's called the ARV, the after repair value. Let's say a property, just keep it simple math. Say it's worth $100,000 after repaired. Mm-hmm. We do a 65% discount on that. So 65,000. Now, if it needs 15,000 repairs, take another 15,000 off. Now you're down to 50,000. And if you want to make $10,000 to $15,000 profit, let's just say you want to make 10,000 profit, go $15,000 lower because you got closing costs. Because on buying auction properties, you've got to close on it and resell it. So you've got transfer tax, all these kinds of different things that are involved there. So then you're down to 35,000. It would be your maximum allowable offer, what we call the MAO, and what we do. But I use 65%, where a lot of investors are still using at 75%. Some markets, they'll even use 80 and 70. I think in this market with a lot of uncertainty, it's better for people to be safer, go down to 65. Plus, it gives you much more margin for error. And that's the biggest reason I want it. unknowns. You never know. Your repairs, you think 15,000. You never know. Sometimes you get in it needs 25 or 30, and now you've got a buffer.
So let's say you had a ARV of 100K. You're buying it at, inclusive of the rehab costs and closing costs, you're buying it at close to 65, which includes of all your cost, right? So then when you sell it, are you selling it at 100K?
So 65% of that minus those repairs, I would actually look at buying the property at 35,000. That's what I'd be looking at. If I want to wholesale it.
Okay.
If I'm just going to rehab it, yeah, maybe I could pay 50 or 45,000 for it.
Sure.
And then put those repairs in, and I still got my margin, pay my realtor commission.
Yeah.
And I'm still okay.
And then when you sell it, then what are you selling it at? At the retail price?
The retail price. Yeah.
Got it.
Got it. Every property right now on the MLS retail.
Guys, so you don't sell it to investors. I mean, you may, but that's like a target.
Certain ones I will. Like I said, if we were talking earlier about a train wreck, one that needs a lot of work, you're not selling that one retail too easy. And so we'll go direct to investors, especially if we have some in that market. Usually the agents that we work with know some investors. So we end up kind of doing, sell it through the agent. The agent gets a commission still on it. But they'll find somebody who's willing to pay a little bit higher. Just you're generally going to get 15 to 25% more selling on the MLS than selling directly to an investor who wants it at a bigger discount.
Got it. Okay. I think that makes sense. Well, this has been good, man. Let's shift the topic. Let's shift gears a little bit to a different area. Throughout your experience in real estate investing, in crypto and everything else, I'm sure you have interacted with a lot of people, talked to a lot of people, made your own mistakes, learned quite a bit. So if there's a 20-year-old Paul listening to this show somewhere, what's one advice you can think that you would want to share with them that could alter the trajectory of their life for good?
So is this somebody that's interested in real estate or just a 20-year-old general?
I'm assuming a 20-year-old is probably interested, but they don't have the cash.
So right? I wish I was starting at 20 for sure in real estate. I didn't start until I was 25. But the first piece of advice I would give them is buy a property that you're going to keep as a rental. Or try to target one of your first ones as one that could be a rental. And then if they don't have cash, you need to find a money partner. Right. Yeah. So if you need to find a money partner, it's got to be somebody who's okay with you holding that as a rental, and they're getting most of their money with interest rate and maybe a 1% or 2% fee on that. So I would definitely tell them just buy and hold, because from 20 to 50 or 60 years old, I'm 50 years old now. But if I held all the properties I would have bought at 25 to what I am now 50, you know how much that value would be. So I
think nobody has ever told, I've yet to meet somebody who says, I'm happy that I sold everything I had. Exactly. Nobody I know, they're like, I wish I didn't sell anything.
I wish I would have kept this or kept that. Yeah, I mean, I still do that. The properties I could have kept, especially when you get a financial crisis like we had in 2008, where I was buying properties so cheap. Just give an example, buying properties off HUD that were listed at $235,000. I was getting them under contract for $90,000. And I was flipping to other investors for $150,000, $155,000.
Without doing any work.
Yeah, you aren't doing anything with that. So yeah, there is opportunity. If we have a financial crisis or, we go into a recession, that's great opportunity for you to buy and hold longer term, just because it will recover. You want to buy when was that Berkshire Hathaway, when there's blood in the streets, right? You want to buy when there's blood in the streets. And when you want to sell your properties when everybody, including your barber, wants to get into real estate. That's when you start to sell.
Completely. When you're getting a real estate tip from a pizza delivery boy, then you know something is going on in the market that you want to get ready for selling it.
So true. Everybody's talking about Bitcoin or cryptos. That's probably your time to sell too. Right?
Yeah. Perfect, Paul. Paul, we have covered a lot of different topics today in terms of auctions itself. Is there something that we didn't talk that you wish that we had a chance to talk about?
I think one of the most important things that in general we don't, in the business side, we don't talk about enough is your health. And how important it is for us to take care of our health from a young age moving on. Now, it's so easy to learn about things through YouTube, through Rumble, and these different sites we can look at and learn. Like I learned intermittent fasting about 5 or 6 years ago. It's one of the best things I ever learned. And, my wife has been great over the past 5 or 6 years, even longer, about buying good organic food, good pure food, just eating better and healthier. It just makes us better. And that's probably the one thing we probably don't talk about.
Paul, thank you. I know this is an important piece for us as well, because we're holistic wealth. We're not just talking about money. We're talking about your mind, your health, your relationship, your purpose, and everything in there in between. So it's important. So thank you for reminding us of that. Paul, a very abstract question that we always ask our host, our guest, is where do you feel humanity whole should migrate towards?
Where should we shift towards? So we're going from and to. We were going from a more free society to where it's a controlled society, and we need to go back to more freedom, more free society where outside ideas are welcome instead of just shut down. That's where I feel we need to go humanity wise, and be more accepting of other people's opinions on stuff, whether you like it or not.
Completely agree, man. I think the advantage of migrations is diversity, and
Yes.
Unfortunately we have a block towards diversity, to diverse thoughts. It's kind of sad that we're okay having physical migration but not having mental migrations.
So true.
Right? We got to have that too. So that can only happen if we're keeping open ideas. Doesn't mean the ideas are right or wrong. It's just having different perspectives.
So true. And then this country, you think about the United States, what it was founded on, it's entrepreneurialism and people from all over the world. We're the melting pot. So I'm half Italian and half Norwegian. So my Italian family migrated over a couple generations ago. Same with my Norwegian family. They migrated over. And, you had the Irish back in the day.
Yeah.
And we've had a lot of Asians. We've had a lot of Indians. We had all this is all great. And it brings us great food and great culture. So the more of this kind of stuff we have, the better off. Just so much better off.
Completely agree. Paul, this is good, man. I know you also train people on doing this work. You're buying it for yourself as well, but you're also training. Talk to us a little bit about the training.
So our training, we got two different versions of it here. We're going to offer a discount to you guys. The do-it-yourself program, we do videos on that, but it's do-it-yourself. You're not getting handheld by us. Normally it's $497. We're going to get a $297 discount, and we're going to get you a link for that. So I will get that to you shortly.
Perfect.
Here. And our other program is $5,500, and that one's more in depth. So that's if you don't know where to start, where to go, how to figure out what the ARV on the property is, how to figure out what your maximum allowable offer would be. That's where we kind of handhold you. We have group coaching, but you can bring in a property that you're looking at and bring it to us, and we'll kind of show you how we figure out what those numbers are if you can't figure that out. But first, we like to say, hey, why don't you come up with the numbers based on what we got, and then we'll verify it for you. We'll tell you where you're right or where you're wrong on that, and then we'll guide you as maybe this isn't the greatest market to be in, or maybe it's a great market to be in. We see great opportunities here. So you get a lot of hand-holding from our knowledge of buying all over the country, bought in 44 to 50 states. So that's probably the best program, and that one's $5,500.
Good. I mean, it's not, and that's a one-time fee, $297 and $5,500.
Yeah, and you get lifetime coaching calls. We have monthly coaching calls. You saw our vendors. We use we use an insurance company that does nationwide, quite a few lenders that are asset-based lenders, and we have private lenders within our group too.
Perfect. Paul, for whoever is listening, it's actually a great offer because most programs and masterclasses and group coaching, they have a recurring payment, right? For getting access to someone like Paul and his group of people, and you're buying his Rolodex and his time, right? That's really what you're buying into. It always comes at a price, but I don't think it's priced too absurdly. I think it's a very fair price, especially when you look at it as a lifetime. Well, hopefully you don't need lifetime of help.
No, but it's always there. Like, the community is always there because things change, right? And it's great to be able to get those updates. Like I'll give updates monthly or even every other week about what's going on in the market from Altos Research or from other articles like Adam out there, which gives foreclosure filings and foreclosure info, where people are moving to. So we give a lot of those things, which are great, but I don't want you to have to repay some kind of a recurring fee. You're in there and you're in the community. You're in the community for life.
Yeah, perfect. Paul, this has been great, man. Where can people find and learn more about these programs? I know you're going to give us a link to the discount program, but if they want to learn about it, where can they find these informations?
So if they want to see a bunch of videos that we've made, it's on YouTube. It's The Virtual Investor and reoauctionacademy.com. You can learn a bit online there. And My House Deals is another one where you could just see myhousedeals.com. Some of the properties we've bought and sold over the years, if you just kind of want to take a look at and take some pictures and learn a little bit more about us, that's on there as well.
Awesome. Well, Paul, thank you again for your time. I really appreciate it. I've learned a lot about an aspect of investing, real estate investing, that I didn't really put a lot of emphasis on. I think it has, like anything else, it's not the silver bullet, but it has a role to play. And I think for each of you, you have to figure out where in your portfolio does it add value. For those of you who are still on the fence, I would say is take a look at these resources, have a conversation with Paul's team, and see where you can take it. And if you want my help and helping you analyze your portfolio and figure out where auctioning can potentially play a role in you, I'm not an auctioneer. I'm not an auction expert, I should say. But we can always look at some of the asset classes and see how concentrated you are and where could this potentially play a role. So feel free to schedule a call with us as well. Thank you, Paul, and thank you for all the listeners to tuning in. We value your time. So hopefully you derived a lot of that from the episode with Paul. We're going to get Paul again for talking about crypto.
That's right.
Awesome. Thank you, Paul.
Thank you. Thanks for having me on. I appreciate it.
Take care.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Socket on an investor call. That link is waiting for you in the show notes below.